Good morning, everybody. It is 7:29 in the morning on this 13th day of April, Friday the 13th. Ooh. Friday the 13th doesn't usually mean a lot for the markets. Um, we've got data coming out, excuse me, at 9 o'clock. We're getting uh, early PMI. Wait, no, that's not right. We're getting JOLTS, job openings. That's at 9 o'clock. But otherwise, from here until then, it's pretty much we're going to be kind of in the clear and in the trend. Okay, man, I don't know why I'm so dry this morning. Okay, cool. Oh man, cryptocurrencies. We'll get back to those. Let's take a peek at our markets. And let's go take a peek at gold. Gold, although we like to watch that on our Forex lens chart. Always have to wait for it to readjust. So gold is actually getting to an interesting spot here as far as looking at a possibility of a short. Right now in the hourly, we are kind of in pointing towards an extended condition on the composite index, but I mean, certainly we're still within the range of wanting to maybe look at taking a short there. Additionally, the RSIs, it's not. I gotta change all these RSIs because they are 30 and 20 are not really good, or 30 and 70 are not really good indications of overbought, oversold. It's more like, I don't know, 15, 85, 80, 20, something like that. Those are better, I believe. Okay, so the gold trade, we should be looking at a short below this. Look, we did test this angle. Why does it do that? We did test this angle down. All right. we're really back to where we were looking a few weeks ago, 1337 leet. And it's we've had a pretty strong run up. Look at that bearish move yesterday, and let's look at the 12 hours, looking pretty ugly as well. 8 hour, just we're really kind of in a touchy spot to want to go short, but we should still look at that being an option. Sorry, I'm probably causing headaches. And so we might not even see that today. Might have to wait till next week, possibly, probably. Ooh, let's take a look at the euro. The euro, where'd you go? Now, the euro, we've, kind of upset that we didn't get into this trade yesterday or this week really at all. We never touched the euro, just kind of, funny feelings about it. But, if we look at the price action of what's happened, it's fallen through here, found support on this arc and this fib line. And I believe that's what is that? Yeah. 382. And, so the conditions for going long or short are really going to be based off of where price ends up in relation to the arc above or below it and the oscillator. Certainly we're looking at more supportive price action as we get closer to this angle here. Because we have moved into this square and now we have a different momentum bias we look at. This is the 1x2 line. So what this says is that when price is above this angle, that means it's moving twice as fast as it is in price as it is in time. Okay? So equilibrium is over here in time and price. Right now, equilibrium in time and price is down here at 22.14. So it should have more difficulty going up than it does going down. So we'll just kind of keep an eye out for that. All right, and you know, any kind of rise right now that actually ends up getting stopped, we should be looking at a short on it. But again, we want some more favorable conditions in our oscillator before we do that. The dollar yen, man, this guy has just been a wonderful. You know, some of us have been holding long since down here, you know, a few weeks ago. You know, some of us have been sitting on this trade for quite some time. And, you know, we do have a long target way out there, probably like near 120, you know, in the many months ahead towards the end of the year. That's kind of where the forecast goes. Will it get there? That's hard to say. It would be a struggle. But, you know, for right now, dollar yen is very nice, very good. It's been a good trade. It has treated the 45 as support yesterday. It fell through the 2x1 and traded up, and now we're sitting in the arc and above this fib line. So we may see 108. Certainly a good drive and a push towards 108 today. That is certainly in the cards. New Zealand dollar. Now, I did put out a trade for the New Zealand dollar early this morning, like at 6.54 is what it says. And I put a short out there to go short at 73.85. Now, we've been focusing a lot, not only in my trading in the MAM account, but in my discussions with you, been discussing a lot the trade with the New Zealand dollar and the pound dollar, on how those ones are very strong moving. They're lagging in performance right now, so which means that they are overly extended in their moves. And so right now we have seen some signs of that changing. And in the New Zealand dollar, US dollar, we're seeing that kind of activity happen. If we look at it on our square of 144, remember how these angles work? When the rule of angles is that when it breaks an angle, it'll move to test the next one, and that's all we've really had happen here. Excuse me. When we drifted, we actually did break above here, but you know, when you break above an angle and you're in extended conditions, you know, on the hourly or higher time frames, odds are it's probably going to pull back. So we did break above it, but we fell through, and now we are holding below it. We're going to get more than likely we'll get this candlestick to close below this angle. And so what does that mean? Well, when price breaks an angle, it'll move to test the next one. So that's right down here. And actually, no, that's not. It's right here. This one. This is just the trend line. This downsloping angle, that is the one that is more than likely going to be tested. Okay. The pound dollar. Oh man, has this guy been a resilient mover? You know what? We're gonna do like a dissertation on this guy today. And I'll keep those there. Euro pound, you know, really showing off the difference in the power of the euro versus the pound right now. The euro pound is showing a lot of weakness. If we look at it here, I mean, in this structure here, it's looking kind of ugly. Now, I will say, though, that we are more than likely in a supportive buy zone right now. And so I'm actually going to consider taking a long here. You know, I got to clean that up. Bam. Okay. So we're only going to really want to go long, probably, you know, at a break and hold above this. This is you know, when this closes in 20 minutes, we've got a tweezer bottom here. We've got a tweezer bottom and tweezer tops all over the place on the 4-hour charts. So those are strong signals that we should not ignore. So this is a tweezer bottom. That is a good indication of a bullish reversal. A tweezer bottom means that we're going to have a bullish reversal. So we should look at price reversing here. And actually, probably targeting 86.38 as our buy entry is a good one. We want to go probably to 86, yeah, 0.8638. Okay. We'll come back to that one. The Aussie dollar, US dollar. Now it is back up to really, gosh, these lines. I need to save as no fibs. Okay, there we go. Oh, no. There we go. Sorry, guys. Why is it doing that? Oh, because it wants to set the I know why. It's setting the whole value that way. Well, that is dumb. Actually, I got it. There we go. All right. So, looking at... My wife is humming or singing or something upstairs. I can hear her. I don't know if you can. Okay, that's better. Okay, so this is probably looking at a very nice and excellent short opportunity. And why? Well, we're right up against the 4.8 inner mid strong support. So this is the most resistive zone that we're going to see in front of us or below us right now. So this is going to be very difficult for the Aussie dollar to get above. To determine how we're going to view this, we want to look at the daily. Now, what's happening with the daily? Okay, the daily is coiling up still. All right, this looks fairly healthy on the daily. So kind of want to hang off a little bit here maybe. The slope of the... this is looking divergent. Yeah, we might be looking at that, looking at a short here. Yeah, definitely, probably. Because we could not breach this, and we're really extended on the hourly. We're in really overbought conditions, but when we're looking at the 4 hour, this is a pretty bearish looking hammer here. And, you know, we could be looking at shorting this, but we probably want to short. You know what? We'll come back to this. If we do a short, we can probably wait till later on in the morning to put that in. We'll keep an eye on it, though. US dollar, Canadian dollar. This is all oil driven, and so some people ask, okay, so what do you do with your, how do you address Gann cycles when there's so much news about oil and all that stuff? Well, it doesn't matter. In forecasting and using Gann theory, you look at the market as a naturally occurring pattern and process that humans cannot change. Is there some flexibility within the price movement and in the trend? Sure, yeah. I mean, just because markets are natural does not mean that they are not also flexible. But in the long-term forecasting, short-term moves based on current events do not matter. They actually, in fact, provide better buying opportunities or quick selling opportunities and waiting for pullbacks. So that's kind of what we're looking at right now, is that we've had a very extended move down. And if we look at the swing to swing here, where are we at? Where have we kind of paused and consolidated? Right at the 618 Fibonacci level, all right? And actually, you know, if we want to get really where is that level? I bet I have to pull up. We probably want to get that up here because we are get our Fibonacci. No, not our Fibonacci's. Our okay, yeah, we are right on an inner 7/8. And we're at a pivot in time as well. Oh yeah, so this is a supportive buy zone actually. So probably want to entertain going long. It's a square of 192. Oh my gosh, and we're at a swing low here. Oh, cool. Okay, cool. Hey, this is awesome. So on this chart, this is a construction that I've created. It's using Gann's law of vibration as our time cycle, but then as far as the everything else, it's kind of an amalgamation of Gann's theory of angles and adapting the square and using Fibonacci arcs, which I think has worked out beautifully. So look at the price activity of the US Canadian dollar when it gets to these kind of pivot areas. Okay, especially this last one here. All right, so we had a swing high near the beginning of a law of vibration 192-day cycle, and then we're 96 days from that down here. So we've had a good thrust and a push down to here over that time period, and so what we're looking for is indications that there's going to be a change in trend. Let's look at this on a daily chart. On a daily, what are we looking at? We are looking at some supportive buying happening pretty soon. I think it might be too early to enter in, so we could put in a buy entry probably below the low of the day at 125.50. Okay. I mean, on the daily, we are extended down. We're in good supportive buying levels. On the 12-hour, we're probably looking at, yeah, same kind of conditions. And we could also wait for a return probably to 125.87 as well. So there's a couple buy entries there, you know, waiting for it to break the low of the day down here or waiting for it to return. This is because we were trading above the 2/8 pivot, the first harmonic level that comes down here, which was our first kind of overbought condition, is now our first oversold condition. Now, the reason why I'm saying we might want to wait till it breaks that low is because below this harmonic is somewhere right down here is the next harmonic, which is actually the -2 harmonic, and that is the extreme oversold condition. And the thing is that when price breaks and closes below the 7/8 after it's coming down from this major, I think it's 90, hold on. Forgot to take that pill. Oh, wait a second. Yes. You know what? I don't know where I put that. Well, that's okay. I know it's in the high 90s. Is that when it breaks that, oh, no, I know. 73% of the time, if it breaks this angle, it will move down to test the -2/8. But 90% of the time, when it reaches that, it'll always bounce back to test the major again, to do the first test of that major on that breakdown. So that's something to watch and keep your eye on. Okay. Doot, doot, doot. Okay, let's take a look at the euro dollar now. Euro dollar. Now we're showing we're showing that kind of bouncing activity that we were looking at. It's looking more like a bear flag right now. I mean, we've been looking at the square. It's a square of 90 all week, so we'll probably keep looking at it this way. Okay, so it did find support. Now observe in the square of 144. Technically, this is a Gann square of 90, but observe in this geometrical structure how price operates and how this is just a trend line, but how it has been treating these angles, okay? And so how the ranges are like little tight as they expand before the next drive. But as we're moving on in time, these are going to get a little bit more expansive. So we did bounce off here. And so we may move to test this angle before we drift down even farther. And eventually, I mean, this is a good position to be looking at, having that bearish bias, using using this kind of looking at it as a flagging formation. Okay. Well, we'll have to see though. Dollar yen. Now, this is a good example. When it broke this angle, where's it going to go? Well, it's going to drive up. Where's the next where's the next angle for the dollar yen to test? Oh, what am I doing? Oh, yeah, price scale. That's all the way up here. 108.12, which is actually a pretty, for whatever reason, you know, when you reach a whole number like 100 or 76 or whatever, when things get to the number 12, 14, or 16, that seems to be an area where price likes to bounce off of. And so that this is the angle that UJ is going to move to test. All right. We've already expanded beyond this recent high. That was on the 6th. And we tried testing it lower, bounced off. So we should really consider this moving higher. You know, our downside threat is limited to, it's very steep. I mean, here's the thing is that the moves within the structure are going to be the pitch is steep. The drives up are going to be very steep, and so are the drives down. So be aware of that. Check on the New Zealand dollar again. This one's playing out pretty nicely. We've been met at the 50% retracement, tested lower, finding a little bit of support on it right now. And that's where we are currently hanging out. If we look at this but I mean, we've broken this trend line. I mean, we didn't, that's a longer term trend line that we've extended beyond. Hear my cat crying. Depending on how we want to generate these trend lines, we can see that we have fallen through. And so this is, we've kind of got a double bearish signals. We've got a break of this Gann angle, and so we should expect to test lower. We've got a break of both of these trend lines. We're hit, you know, we've got 6 minutes to close on the hourly, and we're still sitting on the 50% retracement, which is not a good sign. Actually, we're a touch below it. We look at the price action on the 4-hour chart. Huge divergence. I mean, massive divergence. This is just like the pound dollar. The pound dollar is severely. Let's look at it this way. This right here. Okay. This is Optima by Market Analyst, and this is what I call cheating. Is one second. Where was that? Oh, right here, we're just seeing rows and rows and rows of bearish divergence. If you couldn't tell, red boxes indicate bearish divergence. This is really no different than TradingView's chart. It just looks a little different. This is the composite index down here. And Optima has a, you can put a divergence indicator on any indicator. It's actually pretty freaking genius, and it's pretty accurate. And we can just see that. But to give you an better visual idea that's easier to see, you know, we can see this massive divergence playing out for quite some time. Look at this from, you know, 140.78 all the way up to where we are currently on the 4-hour chart. We are just wickedly and massively divergent. And so we should expect to see prices retrace a significant amount. And also, where is my static square 9? There we go. We crossed above the 360 degree, but we crossed above it on divergence and on weak volume, and we crossed it in very extended overbought conditions. So we should expect to see it have a bit of a drop here. I want to observe this is gonna fall back down. Oh gosh. Oh my god, I did not put in that short. Oh my gosh, I'm so sorry, guys. I think it's perfectly appropriate to do it now. Just hang on to it for a while. There's a, and if you're watching this after the recording's released, there was a gentleman on TradingView who messaged me and was asked about the MAM account and was asking about, you know, my theory behind the trading, because, you know, he had mentioned that the profit on the account, the growth has been good, but then there's also been a massive drawdown. And if you don't know what drawdown means, it just means what percent of the account is exposed that's negative. And it's hard for me to answer because I don't really know the easiest way to answer without getting into a long, what am I looking for? Like a long, easy answer, but it's that any of you who've been with me for a while and using the Gann style analysis that I do, everything's time-based. And when we see these extensions and these moves over a period of time, we take the trade. Ooh, look at that. New Zealand dollar just falling apart here. This is a beautiful, beautiful setup. Oh my goodness. That's exciting. Okay, I need to pull up a clean chart real quick. I'm going to be with you guys for a little while this morning. I know it's 30 minutes, 40 minutes is kind of generally what we do, but I need to go over some things because I want to review with you that. Okay, let's look at this. If you remember, all right, Gann has a certain number of day counts that he likes, okay? So here's our most recent swing low. And if we extend to today, we are at 42 days. 42 days is a good cycle to watch for, because we're getting close to the 42, 45 days. We can consider this 45 days because we have the weekend. And if you remember, this is what Gann wrote about 45-day cycles. Can reverse a trend. It ends blow-offs or very fast moves. That's what that is. This has been a very fast move. How long has that move lasted? Let How long has this move lasted from this swing low? Ooh, the magical 7 days. 7 days in Gann. Remember, 7 is a number of completion. It's a number that reverses things. So we're 7 days from the most recent swing low, but from our longer term swing low, we're 42 days from 45 days. Ends blow-offs, moving from a low to a high in 45 days can also set up a 45-day move that's straight up. But that is a very rare occurrence, and it needs to signify strength on that last day, which we're not seeing that form any real strength here. We're showing weakness. He called this 45 to 49 day cycle the death zone due to the end of many blow-offs. So that's what we're experiencing right now. And then where are we at? Why can't I find where you are at? Oh. Let's go from this recent swing high and measure where we are here. 77 days. That's a series of sevens times 11 is 77. That's another one. All sorts of reasons to see price go down farther here. All right. Cool. Let's keep an eye on this. And so that's where our short bias resides with the pound dollar. And as far as like the entries, you know, the longer I've traded, the more upset I get when I miss a trade. And so this is kind of a healthy way to view the market. And I think this is something that helped me get away from the anxiety of trades moving the opposite direction of what I want them to, is that being short down here guarantees an entry when the price, because price will eventually, if we're going to forecast it out, where are you at? We're going to at least retrace back down to the 137. All right, I think actually we're looking at the 134.5 zone. But when price gets down there, I mean, I'm more concerned about getting an early entry. I want a guaranteed entry. I don't care if it goes 300-500 pips against in this short-term run, because this is where your viewpoint changes. 300 to 500 pips against a position sounds freaky. But if you use Gann and you've used it enough that you're comfortable with it, you know that this move is just extended. This is just like getting something on sale, really. I mean, if I know my bias is short over the next period of months, well, 1 to 2 months, then anything going higher from that initial zone where I'm looking to go short, anything that starts to complete additional cycles or starts to go higher on extended conditions with weak pressure, with weak volume during the intraday, and is very extended on our oscillators, any of those things that I'm babbling on about, those are all like better deals, really. It's kind of the inverse. Think of it on the inverse if you want to go long. The same thing. You go long, but price keeps going down. It's like, well, if I know that it's going to be very valuable higher, why would I not buy it at a discount as it's going down? Okay? That kind of goes contrary to what people say about, you know, don't add to losing positions, but, you know, I don't honestly believe as a Ganalist that there are many losing positions, because it's all time based, and there's just, it's, I don't know. That's just how I've traded for a long time now. Let's also, okay, so we've got some time yet before I want to go over. I did a forecast we're going to go cryptocurrencies real quick. And I've got a forecast for us. And so this is on is this a bullish reversal? Massive motive wave expansion into late June 2018. So that's where I'm forecasting the next swing high in Bitcoin is going to be, as in late June or early July. And forecasting is tricky when dealing with horizontal or angled price projections. I think this will explain in detail how I approach the market and how I take my trades. Forecasting is tricky when you're dealing with horizontal or angled price projections. It's easy to spot where support and resistance areas can be, okay? Forecasting an event is more difficult, all right? Forecasting when something may or will happen is difficult. Forecasting with fundamentals is really pointless and worthless, all right? It is, because all fundamental analysis is lagging information. It doesn't tell you anything. It's like trying to assume that JP Morgan's JP Morgan had their earnings before the market opened, and it was really good. But you can't forecast that. How would you forecast that? There's nothing to go on. That's guessing. Technical analysis is a whole lot of lagging information, but a whole, lesser amount of leading information that you can use to forecast. And financial astrology, that is a leading form of analysis. All right, financial astrology is all involved with forecasting prices. All right, it's not using lagging information. Right, financial astrology is all about identifying a future change. And generally, technical analysis alone, that's usually enough to identify certain trend changes within a 1 to 2 year period. Personally, I've only ever been really accurate within a 365 day period. I'm not as good as Gann or some of the modern day folks who practice Gann's approach, like Michael Jenkins or Constance Brown. I'm always amazed at some of these modern Gann theorists who the accuracy of their calls and projections way out into the future are just staggering. So Gann, Hurst, Elliott, and longitudinal astrometric positioning. Gann and Hurst tell me when something may happen. When will there be a pullback? How soon until a reversal happens? Elliott tells me how far price can go in that range. So if I know something's going to happen in mid or late June, then where will price be in relation to that date? And then financial astrology tells me where something will happen. So financial astrology is kind of like the last, not last meaning bad, but financial astrology is kind of the last component, or the third component. That sounds better. It's the third component in long-term forecasting. Do not let the name financial astrology make you think crazy thoughts. Too late. Financial astrology is mathematical psychology based on astronomy. Okay, here's the forecast, and you know what? It will be. I'll also pull up the chart. So I first want to call your attention to the blue semicircle lines. Okay, these are Sonata Cycles. It's the measurement between two planets' aspects, and then when they return, and then it's plotted out on a chart showing, when it starts and ends, and then when it ends and starts, so forth. Probably seen these in Hurst cycles before, but we can see that often we see swing lows show up. Probably got it. Nope. Where did I put that? Wheel. Give me a moment. Oh, here we are. Okay. So this is what these are, Sonata cycles. And you can see how oftentimes, you know, the swing lows do appear and the swing highs happen in the mid part. Okay, you have a good chance of observing where the swing low is going to be. It can happen a little bit before or after, but then also look at and this is on a daily chart, look at the position of the composite index. All right, when the composite index is below the two averages and you are approaching a swing or a trough in the Sonata cycle here, look at where you see these rises in prices afterwards. You know, right when we get to the mid, you know, we're near a high before it swings down to low again. Okay, we can see this repeated over and over through any instrument. Look how accurate, look at how powerful the signal is when you're like when you are at a extreme oversold condition on the composite index here. You know, these are don't happen that often, but when they do, they're pretty powerful. And so right here, you know, we saw we had an early change. So that's that line there. Going back to here, the wavy lines represent the longitudinal angle of Mars, and the green is the primary line. That's the real line, and then the middle lines are just like the harmonics. They're like just the equal distance between the next Mars line. And for whatever reason, these are called Gann planetary lines. Gann had a formula to transpose longitudinal coordinates onto a price chart. And not every planet moves the same, and not every instrument is sensitive to every planet, but Mars is very, very sensitive to Bitcoin, or Bitcoin's very sensitive to Mars. It's, you know, one or the other. So these are natural support and resistance zones, and you can, I was going to say I probably don't need to pull up the chart, but I should here. But you can see how crazy is it that price responds to these levels. That's pretty wild, isn't it? How it treats these levels as support and resistance. I mean, it's nutty. it's pretty wild. Okay? Pretty wild. So, the thin aqua columns, they represent planetary aspects, and I think I've gone over aspects before, but planetary aspects, they sound some like hocus pocus stuff, but they're really just it's the relationship of one planet to another as far as where its angle is. So if it says like here, this is Mars opposite, or Mars opposition to Venus, that means that they're 180 degrees from another. They're looking across. If something was squared, it would be they'd be like, and you use the Earth as the center. It's the fulcrum. So if Mars is like here, I'll use my hand here. If Earth is here, then Mars is here, and then Pluto's down here. You know, they're forming a 90-degree angle. Then that would be a square. Things like squares and oppositions generally mean bad things, but not. It's a lot of study, because not every aspect is sensitive to every market, and some aspects do work and some don't. And just think about this for a second. There are 4 cardinal crosses, all right? So 0, 90, 180, and 225, and then 360, you know, well, 0, 360. And then you have like the major cross angles, the 45-degree angles. So you got 45, 135, 2 something, and then something else, 315. And you have all of those different angles, and then you have all of these planets: Mercury, Venus, Mars, Earth. You can use the Moon, the Sun, Neptune, Jupiter, Pluto, all the planets. And then so there's a pretty large combination of aspects and planets that you can put on a chart. So it's you got to figure out which ones are going to be the most sensitive, and some of that's kind of figuring out which planet seems to have a lot more structure with the chart you're using. And so I used Mars and then Venus, and this opposition has never formed in Bitcoin's chart history, so I'm expecting some big change of some sort to happen. And then Mars is the key to timing. That's what Gann said. It represents action, also represents conflict and contrarian views. Venus is important in the bond market. And this aspect has never been observed in Bitcoin's history, so watch it. And by the way, you guys are getting like information that you can't find on a Google search. So I think this alone has a lot of value for you. Okay, so the orange column represents a number of retrogrades, and retrogrades in planets means that it depending how the Earth is rotating and how another planet is rotating, sometimes it looks like that planet is moving in reverse, when in fact it's not. It's just we're moving faster than it is. So it looks like it's moving in reverse, but it's not. And so when retrogrades happen, crazy stuff happens. But let's just look at some of these things. This is kind of nuts, actually. Actually, I wanted to go back here. I'm totally nerding out because I like to talk about this stuff. Let's look at the well, we could look at the NASDAQ. All these are Gann swing charts. I don't want to use that. Use the SPX 500. This is looking very bullish or very dangerous. Okay, so let's go to a weekly and let's look at these retrogrades. This will make my point. I hope it does at least, otherwise I'm going to look like an idiot. Retrogrades. So first off, it starts with Mercury retrogrades. So what happens with Mercury retrogrades when they happen? Do you see anything funky? Market top, or swing high, swing high, swing high, swing high, swing high, swing high. Sort of, not really. Not a swing high, not a swing high, not really swing high. Oh, there's a swing high. That's Mercury. And in fact, I was making my little notes here. Mercury retrograde pops up quite a bit. Is just like a don't do anything during the retrograde cycle in the regular stocks. You know, that doesn't mean we don't do anything in cryptocurrencies or in Forex. It's just for regular stock market, which translates very heavily to currencies. Is that you know, when Mercury's retrograde, there's a lot of confusion. Avoid buying things on credit. Don't trust your memory. Those kind of things. That's getting into the horoscopy stuff, which I don't agree with. Let's look at Venus. Venus doesn't show up a lot, but when it does, let's add actually. Let's add that composite index when these show up. If we get a swing highs. Then let's look at Mars. Mars isn't really big. I know I checked this when Mars isn't super big. Jupiter, though. Jupiter does big moves. Causes big moves in markets. Actually, they call it a market timeout. And then Saturn. Saturn is a... What the hell was that? Saturn my notes were just that bad stuff happens. In fact, let's go. Oops. We're going to get back to the regular stuff here in a second. Just humor me. Where can I get the... You know what? That's okay. Just know that Saturn retrogrades are horrible. Every single big crash in history has been during a Saturn retrograde. So that doesn't look healthy looking in the future here. But how does that apply to Bitcoin? What happens to Bitcoin in Saturn retrogrades? Well, they certainly seem to be expansion phases. Although Bitcoin has been nothing but an expansion phase. Although here we did see a little dropping. But if we fast forward to where we are now, oh my gosh, I'm going to make myself sick. We are definitely right the 18th, 5 days away. This is the next retrograde beginning cycle, which is also right on top of this Sonata cycle. I mean, this is going to blow up huge. All right, I'll skip going over the rest of the PowerPoint and just say that the market high will more than likely be in late June, because we have Saturn, Jupiter, Mars, everything's retrograde is overlapping here. This aspect shows up here, and there's the end. Oh crap, I have to do it. Dang it. And here's the analysis, the Bitcoin forecast Gann analysis. So the price ranges, so the 360-degree price levels that we were looking at going towards into June is either 17,312 or beyond that is 32,769. Okay? Square of 9 dates. Okay? June 22nd. That's the second most important date in a calendar year period. It's the second most important. Gann was very, very, very big on June 22nd. It's 93 days from March 21st, equal to 90-degree angle. Summer starts. It is a big deal. Okay. Besides June 22nd, the next one's June 7th. Often advances or declines culminate. So we're right in that zone. So I'm saying like June 28th. Gann's law of vibration is a headache of a thing to try to explain. So it's 192 calendar, 192 days from the all-time high on December 17th, 2017 is June 28th, 2018. That's why I'm saying that's June 28th. And then the 135, we don't have to go over all that. And how high will it go? This is using Elliott to forecast that. And the Hurst cycles show where that market high may be, and that is right within our late June forecast. June 28th, highest target swing price that we should more than likely reach is 30,731. Special note, the most important component of all of this forecast is not the price range, but it's identifying where a turn in a market will happen. All right, it's better to know when a trend is going to change rather than how much money or like what price level you need to target getting to, because that's because if we get to 30,731 before June, I am selling. I'm GTFOing the market until much later. Probably into early September. So let's go back, look at TradingView. And let's review our markets here. Okay. our trades. So, ooh, nice. Look at that. The New Zealand dollar has just crapped all over. It went back down to our kind of longer term. This neon green line is the 886 retracement. So from the swing low, what is that? Oh, that makes more sense. So from this swing high to this swing low, that's not drawn right. What the heck is going on here? Yeah, that was messed up. Never mind that. Okay. Again, where's our target? Boom, down here. Okay, we're going to have to break through. When we get to the 786, we may find a little support here. We'll have to see, though, because this is really extended. It may just blast through these zones. I mean, we have a pretty good way to go if we want to do a fib level from, well, let's say it's this swing low here. Yeah, we'll take this swing low. God, no wonder I was wondering what was going on. I mean, if we're going from this swing to this swing, if 50% retracements are where we probably see our first major bounce, we're looking at 72.95 or just 73. And really, maybe our first major bounce may be, or short-term bounce may just be at the 382 because that is also near the end of this angle. So that should probably be our first target area right here in the New Zealand dollar. Right, let's look over at the pound. Pound showing that it is just not wanting to do anything except go up. Oops. But we have broken down below that trend line, and our real target area that we want to get to is below this Gann line here. And let me clean this up because I've just got toddler drawings all over the chart here. So we broke below a trend line, and we are probably might have a little struggle to get down really fast because we're kind of up against this angle, but really we should see a what is this? What is this? Oh, that's happening here in the next few minutes. We should see the price really, if we didn't get short up here when we had the opportunity, well, when I sent that out, I forgot to send that out early this morning when I did the New Zealand dollar, but a break below this angle, that's what's going to drive price down pretty fast. I mean, you're probably looking at that 140.35, but really probably the 140.11. That's where we're looking. Again, today, 9 o'clock, jolts. Be careful of that. We've got some trades going into the weekend. And again, it's Friday, so every hour that we go, we're going to have less and less participation in this market. And then certainly when we get to the noon hour, 11 Central, 12 Eastern, we're going to have probably almost no participation because everybody works half a day on Friday in the market, I guess. So, yeah. I think we've had a pretty good week. Last week was really great. This week, we kind of got beat up maybe a little bit in the New Zealand dollar and pound dollar trade, but it's in prime shorting. I mean, I don't know what else to say other than it is going to get flushed. It is a parabolic pig that is going to get turned into bacon here pretty soon. And because it is so extended, because the pitch, it's so parabolic, the correction off of it is going to be very swift. It's going to be a very, very, it's going to be a literal dagger move down. So look forward to that move when it happens. And, you know, did I put in, oh yeah, I did. Okay. Yeah. Look forward to watching the rest of these markets move and all these trades start to generate all the moolah that we want it to generate. And yeah, I will visit with you guys on Monday. Have a good day. Bye-bye. Have a safe weekend too. Bye-bye.